What's up, guys? It's Cash Flow Cart. Today is Monday, July 1st. I am filming the July dividend portfolio review and outlook. Guys, I have not been able to film for quite some time now. I've had work every day for the past 9 days between my two jobs. I work at an Italian restaurant, and like I mentioned in a previous video, I work at a sandwich shop also. And yeah, I've been very busy for the past 9 days, but today hopefully I can get some important stuff done for me. I also need to figure out what apartment I'm going to live in next year. I had been kind of procrastinating on it as I decided, what I wanted to do post graduation. So it's been hectic. There's been a lot of stuff going on, but I'm excited today just to go over the portfolio and look at the positions as well as how much they pay me, guys. We talk about goal setting all the time on this channel, whether that's you're first starting out and it's $10 a month, or you've been doing it for a little while and it's $100 a month, whatever it is. Setting these shorter term goals is going to be essential to your journey. It's going to keep you focused, and it's going to make this game seem a lot more doable. When you're first starting out, it's kind of hard to wrap your head around creating a portfolio that can sustain your lifestyle. But if you instead break that longer term goal down into smaller pieces, then it will help you stay focused and dedicated to this game. My goal as of late has been that $200 monthly average, guys. If you've kept up with my videos, I recently crossed that mark. I am now at $204.07, guys, and we will go over what move I made to get there. The estimated annual income of this portfolio is $2,448.83, and the total portfolio value right now is $58,657.72, guys. So again, let's check out what we got going on for July. I am expected to earn $301.55 in dividends. I still have that remaining, and those dividends are going to come from two positions. Those positions are Altria and Realty Income. Let's go ahead and look into the positions in the portfolio, guys. So we will sort by market value. Again, if you've been following the channel, we typically see Apple at that number one spot. However, on July 1st and July 8th, I released kind of a two-part video about my move out of Apple to the tune of 13 shares and reallocating those funds into Hershey. So I went over that in depth in the past two videos. July 1st is more of a, Hershey stock pitch, and kind of a review of why I see value in Hershey stock right now. And then the video on July 8th will be more of, okay, where was my head at with the move in the portfolio, looking at the portfolio from a holistic view, guys. Okay, so let's run through these positions. At the number one now is Altria. That's pretty interesting. I did not expect that one to become my number one, as kind of, I feel like just recently it was at the number 3 slot, but Altria has seen somewhat of a reversal. We will look at the chart real fast. And, just in recent times, I've gone from like break even on this one to now I'm up, over $1 a share. So I know that's nothing to necessarily write home about, but we have seen Altria in kind of this this wedge pattern on the weekly chart, and it's been in this pattern for, like 6+ years. I've built out the position during this time, and hopefully we finally see Altria kind of establish an uptrend for the first time in a while. That would be nice, and I will get some, nice capital gains out of that one. But as far as adding to this position, I'm not really interested in doing so right now. I'm comfortable with where I've built it out to at the 11.5, and then it also pays me $980 estimated annual income. That is my biggest of any position. So it's my number one position in terms of market value. It's also my number one position in terms of estimated annual income. Pretty interesting, but we will stay updated. We'll have to wait and see what happens with Realty Income in the coming months. So next up at the number 2 spot, we have Realty Income. That is $11,250.95, guys. Again, this is the only monthly payer. I like it a lot in the sense that it pays me every month. I do feel like there is kind of a motivating factor to get, 12 paychecks from a position every single year. However, if you have a semi-diversified portfolio, you're probably going to get to, the point where you're making money every month from dividends pretty quick. It pays me $678.54. Again, that's my number 2 position in terms of market value and my number 2 in terms of estimated annual income. So, pretty interesting here seeing these two guys at the top. Moving right along, we have Apple, guys. Like I mentioned in previous videos, Apple was at 63 shares, okay? And I've spoke on not trimming this one, probably not taking it anywhere. However, the recent spike in price in Apple, an all-time high, has been too attractive for me. I've also been at a point where, although I have been working a lot, I still have not been able to set aside, a large amount of money to invest in the portfolio right now. And in order to build out the Hershey position, I did have to make this strategic move of trimming Apple. You can see here based off the chart, the all-time high for this one is $220, and I was able to get out at a fill of roughly $215. So I'm pretty happy with that, and at least from a technical standpoint, I do see Apple as one that's kind of due for a correction. So, realizing these gains, I will have to pay long-term taxes. But, I'll pay that out of pocket, not out of the portfolio. And I was able to move those funds into Hershey at an average price of $183.10. So what? I'm down $1 a share currently. But again, we get way more in depth into this move in the previous videos, so I'm not gonna rehash this whole move, but I thought I would share it in this video too. I know you guys are busy and probably can't catch every single video, but here we go. Apple pays me $50 estimated in the next 12 months. That was at 60, with the recent move. It is now down to 50. Coming in at number 4, guys, we have Microsoft, ticker MSFT. That is currently at a market value of $9,061.71. I've been pretty happy with this one. I've been happy with the performance. And I will say, I contemplated trimming Microsoft a little bit for the Hershey position because it is also one that just hit all-time highs. But I guess with Apple being the bigger position in my portfolio than Microsoft, I didn't want to trim Microsoft at all, only having 20 shares right now. I do want to keep those kind of, I want to keep them in the portfolio forever. And, just to go back to the Apple thing a little bit, I know I really don't advocate for much selling in a dividend portfolio, but, moving forward, I'm probably not going to take any more of Apple off. And again, anytime I do like a big strategic move like this, there will be at least one or maybe two videos covering it like we just saw. So Microsoft pays me $60 estimated in the next 12 months, guys. Moving on, we have Pfizer coming in at $6,191.13 of market value, and that pays me an estimated annual income of $367.92. Pfizer's been good because for a long time, and I am still down on Pfizer. My average price is $33, almost $34 a share. It's currently at $28. So, not a perfect cost basis. But for this one, for a long time, I was kind of building the position in a downtrend. We saw some consolidation, and I continued picking up more shares. And, I don't want to jinx Pfizer. That's not what I'm trying to do here. But I do feel like, I've finally kind of moved on from the phase of watching Pfizer, building out Pfizer, picking up Pfizer shares. And I think I'm ready to kind of set that position and just kind of keep it in the portfolio and not have to always be, buying and buying up more shares as it falls lower. Again, it could go lower, and I'll probably have to address that on the channel if it does. But, I feel pretty comfortable with it. I'm proud of this position I've built out. And as a result, I make $368 from Pfizer. That's a quarterly payer like the rest of these, besides Realty. Moving on, guys, we got Starbucks. So with Starbucks, it's kind of been interesting. I usually kind of advocate for building out positions and kind of really focusing in on building one or two positions for a couple months while they dip or whatever. The Starbucks story looks a little different, and I added... So I had 62 shares, and then, price shot up in a matter of 3-4 weekly candles. And then now, we've finally seen it come back down. I have picked up, 8 more shares, bringing me to a position long of 70 shares in Starbucks at an average price of $81.98. That does put me at an open loss of $339 in this one. Again, I'm not really too worried about that as a dividend income-oriented investor. But, we'll have to see. And if Starbucks continues pulling back and or even continues consolidating, sideways, I will have to, really dive into the due diligence on this one and decide, okay, am I comfortable with this medium-sized position for the portfolio, or do I want to pick up more shares and kind of try to move this up the ladder per se? So again, SBUX, $5,408.82, and it pays me $160 estimated annual income, guys. Next up, the one I am most excited about right now. Literally, my previous 2 videos, like I said, are all about, the first one's about Hershey stock and kind of my stock pitch for it. And in that video that's going to come out actually later today, July 1st, I only had 2 shares of Hershey. And I'm watching the video back. I'm kind of getting it together, whatever. And I'm like, I feel like I sold myself on the stock after watching my video. And I'm taking a shower, And I'm like, oh my gosh, I really just did a lot of due diligence on this one. I've put a lot of thought into this. I've had it on the watch list for months, and I'm gonna come in with 2 shares. And then I'm thinking, and I'm like, okay, we've got a lot of stuff in the tech sector hitting all-time highs. Apple has become the number 1 position in my portfolio. Do I want to take some profits off Apple and kind of reallocate that money into Hershey and, build out kind of a more meaningful position to the portfolio? Also, I cannot stare at positions in my portfolio that are under $1,000. You know what I mean? Like, if I'm gonna build out a position, I want to have conviction in it. I want to put, I want to put my money where my mouth is, I guess. And that was kind of a long-winded way of saying I'm excited to finally be a part of Hershey, and we're gonna see how much more I build it out. I'm excited. Should be very interesting, guys, but it's already over $3,000 in market value. That's 17 shares. And it pays me $93.16 a month. I think the sell point for Hershey, isn't necessarily the starting yield, which is just around 3% right now. It's more of the free cash flow growth and the dividend sustainability present in the company. And with that in mind, Hershey has kind of taken advantage of those attractive metrics, and they have been able to be, I would say, pretty aggressive, very aggressive with dividend increases over the course of the past 5+ years. And, hopefully, fingers crossed, they can continue to do that, and we will end up with, a pretty sweet yield on this one, guys. Okay, I promise I won't talk about Hershey too much more, but again, I know if you guys follow the channel, it's kind of like I'm usually focused on like 1 or 2 things. We talked about the Pfizer. I was focused on the dip consolidation, building that out. We've talked about Starbucks for weeks. I was kind of focused on, okay, do I want to pick up more shares? Hershey, it's been on the watch list for months. That's kind of how this game is. It's a slow-moving thing. And obviously we have a lot of other stuff going on in our lives, so it doesn't make sense then to try to overcomplicate our investing strategy. Rather, it's a little better to kind of see opportunities, learn from them, take advantage of them if you can, and trust that, throughout the years you're going to gain unique opportunities and unique experiences, and you will end up with a pretty diversified and interesting portfolio. So moving on, coming in at the number 8, guys, we have T. Rowe Price. That's $1,369.62, and that pays me $60 in estimated annual income, guys. Okay, I guess real fast, I should probably go over the quarter by quarter breakdown. So for the quarter, for quarters ending in August, November, February, and May, I make an estimated annual income of $109. And then for quarters ending September, December, March, and June, I make an estimated annual income of $202. And then for October, January, April, and then July. I hate how this says next 12 months, but then it starts on August. I'm like, it's July 1st. Why would we not have July on there? Whatever. Okay, Schwab. Schwab hit my line. I'd like to discuss some ideas regarding your software. Anyway, $302 in those quarters. Again, those are the bigger quarters because that's where the Altria paychecks hit. So really nothing else to it. But I'm not too caught up in you never want to get to a place where you're so focused on like smoothing out every month. Rather, you want to get to a place where you're focused on taking advantage of the best opportunities. Okay? So again, guys, thank you so much for tuning into this video. The channel has been doing really good. You know, as busy as I've been, it's like I come back to my computer and it's like another 100, 200, 300 plus views. We have multiple videos cracking that, 1K views. We've gotten a lot of subscribers. I need to check it out, but we should be semi close to 350 subscribers. Again, if you guys have supported the channel in any way, I really appreciate it. We are building the best dividend growth investing community on YouTube. And guys, it's been awesome. Thank you again. This is Cashflow Cart, and I will see you next Monday. Let's build wealth.